All right, Chapter 6, Cost Capital Principle. Statement. The cost capital rate shall be weighted average computed with the use of the proportion of the debt and equity determined with their market value of their current market rates. The current market rate shall be the nominal rate with the return required by the investor of the railroad enterprise in the relevant period. The nominal rate includes the effect of the inflation, the explanation, the cost of the capital, cost of the debt of the equity and finances, the return with the required lender and stockholders of the current described with the Supreme Court, the federal power of the Commission at Hope Nat. Natural Gas Stock Company, 320 U.S. Standard, U.S. 591 603 1944. From the investor of the company, the view of the importance of the enough of the revenue not to operate the expenses, also both the capital cost business to include the service of the debt and divides upon the stock. The standard of the return of the equity of the owner should be compensated from the returns of investment other than enterprise if they have in corresponding risk. The return of the moreover should be sufficient to assure and financial integrity within the enterprise, but to maintain the credit and the attract capital. The cost capital consists of the three components: the cost debt, cost equity, and the choice of the wage with the combined with their cost in a single rate. A cost capital rate was closely related with the measurement asset, the subsequent depreciation and amortization relationship, particularly close with the represent the treatment of the inflation to prove the clarity of the presentation of railroad accounting principle and the elective of the asset and separately in the chapter 7 the asset valuation um, and the related expense of the principal is required to resolve the two long-standing issues. The selection of method measuring the cost of the capital determination extent with which the cost of the capital should be smooth average over the period of the years to reduce the volatility of the rate. Whether the cost capital should be computed with the level individual railroad or holding company or the industry-wide base must be determined for each of the capital applicant affected. Alternative measurement. The Railroad Accounting Principle Board conserved with the three alternative methods of measuring the cost of the capital: traditional nominal with the cost of capital, the current nominal capital with the cost, real cost of the capital, each of the discussed below with the traditional nominal cost capital. The alternative is predominantly regulatory model with the use of the public utility debit is measured as an embedded cost. That is the cost of the time, and the time of the debit is incurred. The embedded cost is incurred with the cost of the concept because it is based on actual outlays, the compromise, the actual interest of the payment, the accruals, and amortize the premium, the discount. Equity, on the other hand, measured with the cost of the return currently inspected with the market value of the investment, similar degrees of the risk and its opportunity with the opposed to the incurred with the cost of the measure of the best return with the investors could go and get on an equally risky alternative investment. Debit inequality rates combined with the weighted average of the both book values and the debit equity resulting cost capital rate with the applied with the investment measured with the historical cost less than accurate depreciation amortization. All right, current nominal cost capital. The alternative currently used in the Interstate Commerce Commission differs with the traditional cost of capital, in which the opportunity concept applies to the debt as well as the equity. The debt is measured by the current cost that it was in to return currently expected by the bondholders and other creditors. Equity is measured in the current cost just under the traditional model. Debt and equity rates the equity into a weighted rate using the market value of the debt and equity. The method contrasts the traditional method using the book values at the weight as under the traditional method. The result in the cost of the capital rate applied with the net historical cost investment base. Or real cost capital. The real cost capital is the current nominal cost of the capital. Inflation premium removed. The investor compensated with the inflation through the measuring of the investment base for the current value. Analysis of the alternative measure methods. The Railroad Accounting Principle Board selected the current cost for the capital following reasons: the competitive market, the windfall gain, the opportunity cost, the consistent measurement, practical consideration. Competitive market. The Railroad Accounting Principle Board believed the current cost of the capital necessary for the railroad because of the according to the Interstate Commerce Commission, a high portion of 80% of the business is no longer subject to the Interstate Commerce Commission maximum rate. The regulation as a result of the large share industry revenue determined with the by the competitive market rather than through the regulatory process. While the monopoly relatively inelastically dependent upon schedule may be able to recover the on lag of the base of the other debt consistently, including the price of the embedded with the cost of the debt. A firm competitive market may not be able to recover such costs. For example, the current interest rate is lower than the embedded cost of the debt, and competitors, new entrants, existing firms seeking to expand the capacity will set the price of the base on the low current rates. In such circumstances, the existing firm may not be able to recover the interest cost of non-callable debt. Some commentators believe that the Railroad Accounting Principal Board erred by assuming that both revenue adequacy determination, competition, restraint total revenues they component with the regulation cannot limit the rates on the portion of the traffic that is competitive, not subject to the maximum regulation. The Railroad Accounting Principal Board agreed with the maximum rate regulation only affects the current traffic applying with the embedded cost of the capital regulated with the traffic and consistent with the market application with the current cost of the capital with the railroad's competitive traffic. Alright, windfall gain. The Railroad Accounting Principal Board concluded the competitive market with which railroad with a service to permit the railroad to cover the current cost of the capital in such markets with measuring the cost of the capital embedded with denied the railroad for the opportunity to recover over the time of the full amount of the interest of the cost could reserve only the lesser and the embedded cost for the current cost. The embedded cost is lower than the cost of the regulation would restrictively recover the embedded cost. When the embedded cost is higher than the current cost, the competition would restrict the recovery of the current cost. Commentators noted that the recovery of the lower embedded with the market rates would occur only if the debits were uncallable. Significant extent with railroad indebtedness and non-callable consisting equipment with the trust certificate, consolidated conditional sales agreement, other similar agreements that are essential for non-callable because the debt cannot be called. The railroads bear the risk of the financial leverage. The Railroad Accounting Principal Board considered the augmentation argument that the current cost of the capital may be given when gainful gain to shareholders. For one of the traditional cost of the capital component of that, regardless of how many of the market rate with the interest change during the time of the loan of the outstanding lender receives not only the interest payment the contracted for at the time of the loan was made, and consequently, while the prices are made with the current cost of the capital, the difference between the embedded the current cost of the debt flows from the shareholders, not lenders. The shareholders for the opportunity for the difference of the increase for the earnings of the nominal current cost of the equity result, with some people believe to be a windfall of the railroads and equity shipper. Railroad Accounting Principal Board notes that, however, the embedded with the cost of the debt if the rate is greater than the cost of the current debt rate, the shareholders also have the opportunity to suffer the decrease for the earnings below on normal cost equity. In event the use of the current cost capital rate the appropriate, as long as both the opportunities for the gain and the risk of the loss are borne equally by the shareholders. Alright, opportunity cost. The railroad believes that the concept of opportunity cost should be applied with the debt as well as the equity. The treatment is necessary for the railroads to attract the capital competitive markets. All departments agree with the opportunity with the cost equity is appropriate measure. The Railroad Accounting Principal Board found favors the current cost of the capital because of the direct measure of the sacrifice necessary to attract the capital cost of the debt, the equity, and the measure for the income of the sacrifice for the making the best alternative investments. For example, suppose that 70% of the best expected with the return available to the investment comparable and the risk of the equity of the investment of the railroad deprived the investor of 17% report return of the could have been made with the alternative investment. The foregone return of the cost of the equity to the railroad return it might pay the attract equity investment. Similar, the prospective lender can accept the return of 13% on another investment or of comparable risk with the pre-tax cost of the debt with the railroad is 13% of the returns must be paid with the attracted debt capital. Traditional cost of the capital, on the other hand, with the treat the cost of debt is incurred with the cost measured with the expenditure of the cost like fuel and wages. If and above the example, the firm is actually paying the interest expense of 11%, including the amortization of premium and the discount of 11%, is treated with the cost of the debt. The Railroad Accounting Principal believes that the treatment does not adequately measure for the sacrifice and effort to attract capital. Some components stay with the opportunity with the cost, but they are only relevant depending on whether the new investment would produce the adequate revenues. They point with the revenue adequacy determination, on the other hand, that is based on the prior years. Consequently, they consider the relevant measures to be interest of the expense incurred with the year of the embedded with the cost of the debt. While the revenue adequacy determination for the calculation of information with the prior year with the calculation of the return of investment with the estimate feature of the results, therefore the relevant cost of the capital opportunity with the cost of investing in the railroad asset, the expected with the returns available with the railroad assets compared with the investor expected with the returns available for the other investment. For the consistency of the debt and component with the opportunity for the cost of must be anticipated with the future interest expense for the interest expense incurred with the prior year of the irrelevant with such comparison. consistent measure of the railroad accounting principle concluded that these market value of the debt within equity should be used with weights combined with the current cost of the debt and inquired with the current with the cost of the capital. The alternative way to use the weights for the bulk of the value of the debt equity. The Railroad Accounting Principle Board reviewed the choice of the market with the book values necessary related to the choice between the current embedded with the cost of the debt. With the Railroad Accounting Principle Board, market value weights are only consistent with the current cost of the debt, while the book value of the weights are consistently embedded with the debt cost of the debt. Therefore, the same reason selected with the current cost of the debt, the Railroad Accounting Principle Board selected the market value weights. Practical consideration, the Railroad Accounting Principle Board decided the investors should continue to compensate with the inflation by the use of the normal cost and capital rate rather than measuring the investment base of the current cost. The Railroad Accounting Principle Board selected the most common method of compensation application nominal cost method of the investment base measured by the net historical cost less accumulated depreciation amortization. The method of the compensation and say the investors expected to change the general price level. The Railroad Accounting Principle Board decision favored the nominal rates were made with the context of the Railroad Accounting Principle Board over the treatment of inflation in the Chapter 7 the asset valuation related with the expense for the discussion treatment of the inflation of the respective of the assets. The Railroad Accounting Principle Board decides against using the real cost of the capital rate with the practical reason for the real cost of the capital requires the estimate of the rates over the inflation expected by the market. Moreover, the theory that requires the estimate is both the expected rate of the general inflation to the expected rate for the change of the specific rate and cost indices and use in general inflation rate where used along with the investor might have the protection with the inflation that they would have in competitive interest rate. On the other hand, with the expected rate change the specific index where the used and the investors may enter the return under over their cost of capital. Alright, but base rates of inflation expected by the market are difficult to measure because they cannot be observed in the long term and are long term in nature. Moreover, the 1 year measure of the inflation could be result in unstable real rates and notify that the benefit of the stability of the primary benefit real rates purpose to offer. Alright, alternative smoothing method. The Railroad Accounting Principle Board considered two methods of reducing volatile inherent annual cost capital rates. Using a moving average. Two, smoothing of the market value of the calculation of the cost capital rate with the weight over the cost of debt and equity. The non-commentators supported smoothing the Railroad Academic Principle, Railroad Accounting Principle Board considered the rationally presented with the commentators concluded that smoothing is inappropriate with two reasons. The measure of annual cost of the cost capital rate should reflect the volatile in the rates, so the smoothing would violate with the data integrity principle, making the annual rates seem less volatile, and they really are. Alright, smoothing the cost capital measurement of the revenue adequacy determination matter of the regulatory policy rather than cost accounting applications effective. The regulatory application preferred effective with the cost capital principle and also incurrent with the nominal rate. However, the individual or national rate depends on the requirements in the specific application. Revenue adequacy. The Railroad Accounting Principle Board considered two of the choices and with respect to the level with the cost of the capital was determined one level that required with the revenue adequacy purpose of two the level of the industry as a whole. The Railroad Accounting Principle Board concluded that one exemption from the use of the industrial wide with the cost capital should be concluded. Furthermore, the Railroad Accounting Principle Board believed the rate should continue to be computed with the aggregated with the base for the sample of the financial sound railroads. For the use of the industrial-wide rates provided with the incentive of the manager, the efficiency has become efficient management. The railroad is able to attract capital at lower than average rates than the average of the determined revenue adequacy may be enabled the firm to retain the benefits of low-cost capital. Similar with the railroads, the high-cost capital use of average cost incurred for the capital of the most efficient. The Railroad Accounting Principle Board believes the use of the average rate makes the estimate cost of the equity more reliable. Litzenberg puts the matter as follows. It's very difficult to obtain reliable separate with the capital assessment. The individual railroad margin of error associated with the estimate And estimates of the cost capital of individual railroads would be too large to be able to detect the intra-industry difference with the true capital of the cost of the may or may not exist. The composite cost capital is estimate. A large group of investment grade railroads is the judgmental, reliable assessment of the true cost of the capital in the individual railroad. Litzenberg verified statement, ex parte number 393, March 1981. All right, your railroad accounting principle believes the measure of the cost of the capital in the industry-wide basis for the use of the current with the cost of the debt is not appropriate. The current cost of the debt does not differ among the firms much over the embedded with the cost of the debt. Furthermore, according to the financial literature, the cost of the current individual firm within reasonable boundaries independent of the capital structure. Consequently, within industry-wide with the traditional cost of the capital, the incorporating of the embedded cost of the debt may or may not reasonably repeat the traditional cost of the capital. Individual railroads, industrial wood, current capital cost of capital rate to be expected with reasonable represent with the current cost of the capital of individual railroads. Alright, an exemption to the use of the industry wide cost of capital rate is except if the railroad is shown to facilitate material different and economic circumstances beyond the control of the railroad management. Then they use the industry. In such case, the individual railroad cost of the capital may be used. Alright, all other applicants. Further, with the regulatory application determine is whether the individual industry or the wide rate should be based on the casualty principle, practicality principles, and generally the casualty principles should indicate the individual rates of the preferred industry wide rates. However, the practical principle would be permit the industry wide rate a less expensive method to apply this to be substituted. Chapter 7: Assets and Valuation, Related Expenses and Principles.